Hey, what's up, my friend? Welcome back to this week's market analysis. It is so good to have you with me once again, alright? So, in today's video, right, we will be looking at the broad overview of the financial markets, right? Like the forex market, the indices, the metals, cotton, bonds, and etc. Right? A lot will be covered, so you have a good understanding of what's going on in the financial markets right now. So, you don't get left behind, all right? And on top of it, we will also be, discussing the best forex trading setups for the week, right? I had a comment from a subscriber asking me to, talk more about the FX market. So that's what we will be doing today as well. And, share with you the best setups I'm looking at and how to trade them, right? I think that's important, right? How to trade those markets. So all this and more in today's video. I'll see you there. Okay, so right now you are seeing the charts and it may seem a little different from, my earlier videos, right? That's because I've actually, switched trading platform. This one over here, it's called TradingView. I'm sure, most of you have heard of this charting platform, and I've actually made the switch to TradingView. Right, there are a few reasons why, but I won't go into it in this video, right? Maybe I would write a blog post sometime in the future, but basically I am, trading with this TradingView platform, from today onwards. So, yep, may seem a little different, but, trust me, after a while, you would get the hang of things. So this market, just to orientate you, right, just a quick one. This one is the market I'm trading. This one is euro dollar. This is the particular time frame. So if you're wondering, what market this is, what is the time frame, just look at this top left hand corner. Okay, so this one is euro dollar, and I believe I've covered this quite often. I mean, in the earlier weekly market analysis, right? I said, right, looking back, euro dollar basically, right, is in this range period for about, I would say, since November till right now is June, a good, right, I would say 6 months, 7 months, right? And it finally broke out of this resistance over here. So you can see that price broke out of it, and basically it formed this what I call a somewhat of a bullish continuation pattern, right? This looks somewhat like a bullish flag pattern, right? But what happened is that we had this volatility spike because of the French election. I basically went long on the break of this high. When price closes above it, I went long. My stop loss is 1 ATR below this, and I'm still not stopped out of this trade. In fact, it went against me before going back in my favor, forming another potential bullish flag, and on Friday it closed higher once again. So for traders who who are looking to scale in their trade, I would say this is another potential setup for you to scale in your trade, right? Another bullish flag pattern when price has closed higher. So where do you put your stop loss, right? A couple of levels that you can reference from, either from this low or this mini swing low over here, right? I leave it to you which you would be more comfortable with, whether you're going to be more conservative or aggressive, right? I usually set my stops 1 ATR beyond the lows. Okay, so I don't get stopped up just because price spiked down and continue higher, right? I don't want to get stopped up on this type of spike move. So this is for euro dollar and bullish. Pound dollar, right? Similar story to the euro, right? If you recall the euro I just mentioned earlier, right? Price has been in the range and then it broke out. For pound dollar, right, things isn't looking as strong, but the key thing to look for is that it's still holding at this area of resistance. All right, you notice this area of resistance. Price has yet to close below it. Okay, so right now I would say pound dollar still bullish unless it closes below the resistance, go back into the range, then things will look bearish from the chart, right? So until then, right, if it's still holding above it, right, I'm bullish on the pound dollar. So this one over here, Aussie dollar, things are, I would say, on the opposite side of things. This is now looking bearish. As you can see, price is below the 200 period moving average, right? Friday we saw some buyers coming in, right? We have a strong bullish close. So a level to look for if you want to trade on the short side is this 75 level, right? This is where previous support, price then broke below it. What does it become? Previous support turned resistance, right? Then it traded lower, and this is still the level to be looking for, right? The 75 level if you are looking for shorting opportunities. New Zealand dollar, okay, loading. Aha, it's back here. Okay, so New Zealand dollar, right? looking pretty bullish. You can see that basically was in this small range over here. Then, you know, it tried to retest support multiple times. 1 time, 2 time, 3 time. Couldn't break lower, and then, you know, rally all the way up higher, taking out this highs over here. So right now, definitely, right, price is above the 200 MA, right? I am bullish on this, looking to long. So you can see that, you know, the 200 MA is really a very good trend filter to tell you whether you should be long or short. Of course, you know, if you're a shorter term trader, right, the 200 MA may be a little bit slow for you because, you know, it is you know, taking into account the past 200 candles, right? So this is more for, I would say, longer term swing and position trader. The 200 period moving average is definitely a very useful tool to tell you whether, you know, to stay long or short. Right, so New Zealand dollar, right, we have this strong close, right? I would, you know, expect price to actually come back and retest this highs over here at the 725 level for New Zealand dollar. Moving on, dollar Canadian, you can see, right, price above the 200 MA, basically broke up, then they came back all the way back down, retraced, retested this area of resistance, and the likelihood, if you ask me, it would probably, you know, go back down and retest this area of support, right, where, you know, buyers could potentially come in. This is for the dollar Canadian. And the last major currency pair is the dollar yen, right? This is I would say, for me, price is basically in the middle of nowhere. So I don't really have any trading setup on this. I'm more of on the sidelines. Okay, so dollar yen, right? Price is in the middle of this range, this highs and this lows. So between the 115 and the 108 area, right? So for me, I prefer to trade from an area of value, either, you know, at the highs or the lows. So since price is in the middle of nowhere, I usually would stay out. Okay, so that is for the forex markets, right? Let's move on into the bond market, shall we? Right, the bond market. Let's have a look at how about the 10-year treasury note? Okay, so the 10-year treasury note, again, this is very similar to the euro dollar currency pair you see earlier, right? Basically, price was in the middle of this range. Okay, then what happened is that price then broke out of it, came back into the range, and right now, you know, trade back towards this high and this area of resistance over here, and it's forming some sort of a build up over here. So if you ask me, right, this is looking good. This is a sign of strength. Why is that? Because if you think about this, if you really just think about this, if this is let's say this is the area of resistance, right? If there is really a lot of selling pressure coming in, price shouldn't be hovering at resistance for, you know, for quite a while, right? In fact, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. That is about 2 weeks. Price has been hovering at this level for about 2 weeks. If there is such a strong selling pressure, why is price still at this level, at this area? Okay, compared to previously, where price came into this level, sold off, came into this level, sold off, right? But now, no, it's still hovering around here. So this is a sign of strength. So for me, right, I'm looking to get long, right? So if price were to be able to close above this highs, right, I'm looking to get long on this 10-year treasury note. Okay, so this is the bond market that I'm looking at. Definitely worth paying attention to, right? Moving on, what else? Equities, shall we? Equities, the S&P 500, right? So still looking bullish. There is nothing bearish on this, right? If you've followed the previous month weekly market analysis, I said the equity markets, right, above 200 MA, stay long. There is no reason to be short at all, right? So I know that for a fact, right, that, you know, on this candle over here, we have this massive sell-off over here, and a lot of traders are going to look at this candle and say, oh man, this is where the reversal comes in, this is the market top, this is where the market collapsed. But look what happened, right? Boom, 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 all the way up, right? The market has continued to rally higher. So why do you want to fight the trend, right? It is quite silly to think that, you know, this one candle can erase this entire potential up move, right? I would say the trend, the long-term trend is primary. The candlestick patterns, the individual one, are secondary, right? Always look at the long-term trend, right? Don't look at the candlestick pattern to give you whether you should be long or short, right? So needless to say, right, this market very bullish, and to get an entry, right, there are a couple of ways, right? You could have traded this inside bar over here. There was this inside bar, right? Or you would have gone down into a lower time frame and look for a valid trading setup. So for example, this one on this lower time frame, you can see that price basically was in this range here on the 1 hour time frame, right? So there was actually a valid opportunity to get long on this false break over here, where price basically traded below the lows, taking out the stops below this low, below this low, below this low, and then it closed higher on this green candle over here, right? So this is a valid setup to go long, right? Because why is that? You're basically profiting right now from traders who went short on this low, went short on this low, right? So as the price rallied higher, these traders who are short would cut their loss, right? And eventually that, fuel, it had more buying pressure that, fueled this break above these highs. So this was another way that you could have got on board this S&P trade. This is on a 1 hour time frame. So I do understand that, for those of you who have a, full-time job, that may not be a setup that you could have taken. Okay, so this is for the S&P, bullish. In fact, I think the other equity markets, most of them are bullish as well. So no reason to be short. No reason to be short generally across the equity markets. How about a metal, right? Metal like gold, right? Let's look at gold. Okay, gold, you can see price basically, right, still above 200 MA, bullish, right? In fact, it had this strong move higher, bullish flag pattern, and right now it broke out of it and seemed to be likely to retest this 1300 level. Okay, so setup wise, right, let's see what we can find. If you go down to the 1 hour, yep, this is a time frame on 1 hour. This I see is a potential resistance, so price could potentially come back down, retest previous resistance, turn support. You can look for a valid entry trigger back towards the upside. This is for gold. And another market I'll look at, how about something that is seldom covered? Let's talk about, let's see, agriculture. I know agriculture is a market that a lot of retail traders don't trade, but there are opportunities, right? For example, let's look at corn, right? This is cotton. Okay, so cotton, price is above the 200 period moving average. In fact, I managed to draw a trend line and has been respecting it for a while. So if you ask me, this 76 level is definitely a level that you want to be looking for. You have the confluence of the trend line, right, this upward trend line, plus this swing low over here, right? So if you can get a false break setup, right, a pin bar or an engulfing, that could be a potential opportunity to get long back towards this highs over here. So this is for cotton, another market that is worth looking at. Okay, so just a quick recap, right, to what we have covered in this week's market analysis, right? Looking at a broad overview of what the markets are doing. So we covered the foreign currency, FX, right? I say euro dollar, pound dollar, and the New Zealand dollar. Those are all looking bullish, right? Possible to get a long setups on all these three markets. And then we covered the bond market. I say the 10-year treasury note, right? T-note, let's call it T-note, right? A potential breakout on the cards as price was still hovering around resistance. Then I mentioned the S&P, the ES, right? Still looking bullish, right? No reason to be shorting it at all. And then we talk about gold, bullish as well. And last but not least is this cotton market that you're seeing, also bullish. Seems that we have a lot of bullish setups across the board. So yep, this is what I'm looking at for this week, for this month. For those of you who are trading longer term, I would say these are some of the key markets to be looking at. All right, so with that, I have come to the end of this week's market analysis. I hope this really helps. Right, so if you do, right, please help me hit the like button and the subscribe button below, so I know this is something that you enjoy, right? So this is feedback for me, and I can continue to producing videos in this type of manner. Okay, so with that, I wish you good luck and good trading. I'll talk to you soon.